Hello and welcome to the Global View on this Monday. I'm Andrew Gogan. Thanks for joining us again at AusBiz as we get this trading week underway. Well, global equities were steadied on Friday, while most major European markets were closed for the holidays amid ongoing uncertainty about an end to the war in the Middle East. On Wall Street, the S&P 500 and Nasdaq advanced to record closing highs, boosted by robust earnings and a dip in crude prices. Both indices logging their sixth consecutive weekly advance, their longest run of weekly gains since October 2024. Analysts now seeing aggregate first quarter earnings growth of almost 28% year on year. Well, stock specifically, Apple shares advanced after the company provided a solid sales forecast touting strong demand for its iPhone 17 and MacBook Neo. Among the other Mag 7 stocks, Nvidia and Meta slipped, and Alphabet rose further and is rapidly closing in on Nvidia's $4.8 trillion market cap, ending the week at $4.66 trillion. Software companies climbed after Atlassian lifted its annual forecast. The enterprise software maker surging almost 30%, Salesforce and ServiceNow also rising. Roblox fell following a cut in its annual bookings forecast, while Reddit jumped after an upbeat quarterly revenue forecast. Among the oil majors, ExxonMobil's quarterly profit was hit by Middle East disruptions, and Chevron beat earnings expectations, but booked its lowest profit in 5 years. Well, President Trump has said an Iranian proposal to end the war within 30 days was not acceptable because they have not yet paid a big enough price for what they have done to humanity and the world over the last 47 years. Iranian media said the regime's 14-point proposal includes withdrawing US forces from nearby areas, lifting the blockade, releasing frozen assets, paying compensation and lifting sanctions, and ending the war on all fronts including Lebanon, and creating a new control mechanism for the Strait of Hormuz. President Trump has subsequently said an operation to escort neutral merchant ships out of the Persian Gulf will begin today. A proposal to delay nuclear issues until a later phase, meanwhile, appears to be the biggest source of disagreement. Meanwhile, the US has confirmed it will withdraw 5,000 troops from Germany over the next 6 to 12 months. And the Trump administration has lifted tariffs on EU-made cars and trucks from 15% to 25%, citing alleged non-compliance with the existing trade agreement. Well, the US two-year Treasury yield was close to 3.9% on Friday, the 10-year at 4.4%. Australian three-year government bond yields are around 3.7%, the 10-year at 5.03%. Markets pricing in a 75% chance the RBA cash rate will be hiked by 25 basis points at tomorrow's meeting, and a 100% chance by June. The US dollar index was up slightly on Friday. The Aussie is at 72.1 US cents. An Iranian proposal on negotiations with the US sent crude oil futures sharply lower on Friday before rebounding, with Iran still blocking the Strait of Hormuz and US Navy blocking exports of Iranian crude. Brent crude futures in July settling at 108 US a barrel. Gold reversed losses on hopes of a breakthrough to end the war. Spot gold at around $4,610 an ounce. Copper little changed. Iron ore at 110 US a ton. And Bitcoin trading close to 78,500 US dollars. Well, to get across those market moves globally and also with the focus on New Zealand, I caught up with Brett Gordon.
Not only are tech earnings very strong, particularly the likes of Alphabet and Amazon really pushing the market, but we also had some industrials such as Caterpillar perform really strongly on the back of their results as well. So what we're starting to hopefully see is some breadth there, though most concerning, probably driving, if you're particularly looking over towards the technology companies, is very much that sector tied to the AI trade, whether it be the power generation through to data centers. That's really, really leading at it, and it is quite narrow. So a huge week this week coming up. I think something like 200 S&P 500 companies reporting, and I think that breadth really needs to build out to consolidate this rally.
There's perhaps some surprise on our side, given the underperformance. Certainly what we're seeing here in Australia of the strength in that rally we're seeing on Wall Street. Do you feel as though it's sustainable?
Well, it's narrow at the moment. That's the thing, right? So it's very much tied to anything that's associated to the AI trade, and most other stocks are getting left behind. Medtech, for example, a sector that's on paper and fundamentals is one of the most investable sectors given an aging population, but that sector has just been absolutely left behind. Software continues to struggle. even within the technology complex. So it's very much led by chip makers and anything associated with data centers.
And then, of course, we have geopolitics, the latest in terms of news flow out of the Middle East. Brad, looks as though, well, the US has essentially rejected that proposal from Iran. What are the likely implications of that as this drags on?
Well, it's pretty tiring, isn't it? Yeah, look, I mean, every week that this goes on, pressure from oil prices is going to go up. Look, there does seem to be some sort of rebalancing in the oil supply matrix. I saw a figure that in the weekend, I think that the US has increased its exports by 4.5 million barrels since the start of the war, given that Saudi exporting 6 to 7 million barrels per day through their pipeline through to the Red Sea, and also you've got Saudi that's utilising their pipeline for about 1.5 million barrels. There has been a redirection of supply. Let's call that about $10 to $12 million a barrel new supply coming into the market, or offsetting the 20 million barrels per day lost. But look, it remains a real issue for markets, and yeah, as I say, it's getting pretty tiring.
All right. So, how have you opened there then, Brad?
We've opened fairly weak, and that's really on the back of A2 milk product recall, which is never helpful. But two, I guess, company updates that we think are quite interesting. EBOS had held an investor day in Sydney on Thursday last week, and that company was very much a show me story now. It is one of our New Zealand's leading companies, pharmaceutical supply, distribution, pet care, and the like. They are touting returning back to their mid to high single digit levels of growth, with contributions from acquisitions, supported by about a 5.5% dividend yield. So look, that stock is probably there or thereabouts at bottom after being a very, very difficult 18 months. But it does become a show me. It's going to need earnings results to improve. And Summerset, retirement village sector, held an investor day showcasing its Melbourne, Victoria strategy, and that's going to be, the war has probably slowed apartment or retirement unit sales because the crimping of people's budgets, but long term, that's very well placed business.
Now, Brad, as I mentioned, obviously the key focus for us here is the RBA decision, which drops tomorrow. Expectations, we're going to hike rates again. What's the outlook for your own Reserve Bank there?
Yeah, look, it has changed a lot in the last 2 or 3 months, particularly since the war. We are now looking at potentially 3 rate hikes this year. Some in the market are saying May. That may not happen. It's more likely to be a July through to the end of the year. Obviously, we've got an election overlaying that as well, which I presume the Reserve Bank will be watching closely and not wanting to move too much in the face of. But yeah, their main mandate is inflation, and new Reserve Bank governor is coming out more and more saying that inflation is going to be an issue and it's going to get harder to talk through.
And overall, what are you seeing as the trajectory of the New Zealand economy?
Well, look, it's we share these stories over the barbecue every weekend at the moment. It's we started off this year quite optimistic that we were seeing some really good green shoots, but it has very much been derailed by what's happening in the Middle East and oil prices. So diesel here in particular has doubled in price over a short space of time. So that just has such a huge impact on confidence. So unfortunately, what was looking like a good recovery story for 2026, we hold hopes that it might be a 2027 story, or second half 2026 at least. But it's certainly the New Zealand economy a little bit less broad than Australia. So we are fortunate that we've got agriculture prices and farms doing very well.
Yeah, Brad, I mean, you mentioned those, the rising fuel prices. Obviously, particularly, I would have thought that would hit the ag sector hard. Have you seen more and more companies issue downgrades as a result?
Not yet directly as a result of of the fuel price increases. But then Summerset made comments in their investor day on Friday that they are seeing a slowdown in unit sales as a result of just less confidence. I mean, I think with Summerset, the problem is you've got people needing to sell their homes in order to buy a retirement unit. That slows. They can't settle with Summerset. So there is, I guess, some second order effects, but no direct. Well, I guess there was. EBOS about a week ago did a very small downgrade related to fuel prices, but so we're not seeing much, but it is coming through in sort of second order.
That's Brad Gordon from Forsyth Bar. Let's take a look at the local market where we're likely to open on this Monday. And so negative, around 0.25% according to S&P ASX 200 futures. They're bearing in mind, look, we did have a positive session on Friday, but that was after 8 consecutive negative sessions. So the Australian market remaining under a lot of pressure, particularly ahead of that key RBA decision tomorrow. So with this, the open just around the corner.